Hello everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. No trade calls, no recommendations, or responsible own stuff. We're here for educational purpose only. So I thought we'd take a look at these DXY framework we've been working with for quite some time, just as a little bit of a reminder here as we're at an interesting inflection point. So basically here, what you're looking at is the weekly, right? And for the better part of past years, we've been in this broad multi-year range. We're stuck basically inside 106 and 100 with a couple of attempts to break above, break below without really getting traction. This big fake out, right? Now, what tends to happen on all these range trades is fairly simpler, fairly basic stuff, right? Once we get a break above, the move back down should hold for an extension higher, right? Once that fails to hold, then your base case is that you're going to go right back to the opposite side of the range. And what we were working for the better part of 2025, right, is this range break to the downside, right? And this range break to the downside, so highs into these initial lows on the break, was pointing to a potential extension back into, 123, 150 to the downside. What was the key was what was happening around the 97 mark. And again, you see these $3 increments work quite well. So again, in terms of the bigger picture, this was a big multi-year trend line that was holding in line with that 97 mark, and the market was unable to get any real traction. We highlighted this a long time. We said, the longer it takes to get traction below that 97, the more you get that classical kind of bull underwater potential scenario. And here you could see, even on the weekly, we had an attempt here in June and we couldn't get a close below. We had another attempt here in September, we couldn't get it close below. And we had another attempt here in January and we couldn't get it close below. So again, every time that happens, clearly the downside level is getting weaker, but if it doesn't break, it doesn't break. And here we're right back into that ball underwater scenario where the risk is that this was a similar failed breakout of that range that we got here and puts us right smack into a basic range trading scenario. And obviously, what did we said here? When you break above and you fail you expect the test of the opposite side. So here the risk is clearly a retest of that opposite side of the range. Now, clearly, stuff doesn't tend to go in a straight line. We'll have to wait and see. You have a lot of confluence around the 103, the 200 week coming in there, but this is the framework we'd be working with. So right here, back to the daily, what you want to watch here very, very closely, especially as we go into this long weekend, is how we close, because the risk here, and again, full disclosure, our base case scenario is still that 103 needs to print, that we have to come back into mid, is that, again, that ball underwater is still present and we shoot back into that 103. Now, should we move back decisively into 103 or even back into the 106, I would, try and don't be the guy or the gal who is here calling DXY to 120, 130, or the guy or the girl break here DXY to 0, right? Just remember, if we break back inside this year, this is a multi-year range, and there has to be a very, very good reason to shift us out of this range. So I would say clearly the move back into mid is in play here, but don't get carried away. As long as we're inside of the range, treat it as a range trade. Outside, there are a lot of different things we can look at, but right now I just want to highlight is don't get, especially with a very busy tape with a lot of headlines all over the place, let the levels guide. All here is to the downside. You've got very, very strong 97 resistance on this break and follow through outside the range. The fact that we can't get there gets us pressing on this previous range low, now resistance. If that breaks, chances are, again, with this being the most consensus trade at the beginning of the year, everybody's short the dollar, right? And we talked about the year doesn't really start until all the consensus trades, get stopped out. Short dollar, we're going to cut 7 times, AI to the moon. All those guys need to get stopped out before the year can start. And here, what we're looking at is here back into 103. What happens if we get into 103? Well, then it just becomes a range trade. This becomes mid. You have not an awful lot of asymmetry trading at mid, but top end of mid upside attracts, bottom end of mid downside attracts, and we're just right back in a range trade scenario. Okay, hope that was useful. Wishing everybody an awesome one. Talk to you guys soon. Take care. Bye bye.